Well, new research shows investors own about 42% of all condos in Ontario, while corporations account for 13% of investor-owned condos. This is according to new data out from Statistics Canada today. For his take, we're joined by John Pasalis, president and broker at Realosophy Realty. John, always great to get your context on what's happening out there. When it comes to this data from StatsCan, it seems quite revealing in terms of, the proportion of investors in this province, particularly in the condo market. But what jumped out to you about it?
I think the interesting part was that corporations made such a big share of the condo market. And I think, this is quite timely, this research coming out right now. It's quite important. And Statistics Canada cited a number of papers that really highlighted how areas and segments of the market that are disproportionately dominated by real estate investors tend to amplify housing cycles. So they have a big impact on prices when prices are rising, and they tend to have bigger declines when prices are falling. And this is really one of the drivers behind some of this latest research.
It also noted that sort of on the flip side of things, when you have investors in markets, it means potentially that those are leading to more rentals available to people, though we know that when a condo is rented out, it's going to be, more costly than purpose-built rental apartments would be.
Yeah, absolutely. And again, this the fact that we're filling the rental stock with condominiums is really just a function of the fact that we're not prioritizing building purpose-built rentals, which is arguably more important because that's permanent rental stock, whereas condominiums, of course, are not. But we haven't prioritized that in Canada for quite some time, and we've seen a bit of an increase for the past couple of years. But certainly, there's a big hole in Ontario and in Toronto.
So, in these past few months, John, with mortgage rates climbing as much as they have, particularly variable rates, people who have got variable rates recently are feeling this so much. What are you hearing from investors that have a property, maybe two, maybe more, and we know that some investors were not breaking even before, in terms of bringing in enough to cover their carrying costs. What are you hearing from them these days?
It's really interesting. They're buckling down. Like I said earlier, we tend to see, in down markets, investors sometimes are the first ones to exit. But with the way prices fell so rapidly last year, close to 20% in the span of 4, 5, 6 months, investors are averse to losses, and their losses are measured against what the peak prices were, and no one wants to sell 20% below the peak prices. And even if they're running cash flow negative, they'd rather take on more debt to cover their higher debt obligations today, hoping that the market's going to recover in the next year or so. So they're holding on for the long term is at least what we're seeing right now.
So we also got this new data from the Toronto Real Estate Board today. It follows Vancouver and Calgary data as well that shows that sales are way down in January, down more than 40% in Toronto. What are you seeing out there? Does that sort of reflect the level of activity that you're seeing?
Not right now, exactly. No, it doesn't. On the surface, you're looking at the stats and you think it's a pretty bearish market. The market's been pretty flat for most of the fall since July, but we're finding right now on the ground is that demand has actually picked up a fair bit, and we're kind of seeing that in it's not kind of translating into sales, it's translating into more competition on homes, on the nice homes that come on the market. But the reality is that inventory is quite constrained. New listings are close to a 20-year low, so we're not seeing this increase in sales yet. So demand is picked up a little bit, and I think buyers have seen that prices were flat and are just kind of getting tired of waiting and jumping it back into the market.
So does that potentially mean then, John, that it's maybe investors or maybe people sitting on the sidelines with cash that are waiting for this moment versus somebody that's trying to sell their house and then move into the next one?
Yeah, investors to some extent. I think it's hard, especially in the Toronto area, for investors to get in. But what we're finding is a lot of the buyers that hit pause last year, were waiting and hoping prices would fall further in the fall, and they didn't. Prices have been pretty much flat since July. So some of those buyers just need a home, and they're just deciding, maybe we've hit a floor on prices. We're not expecting more rate increases. So some of them are just jumping into to get into the housing market.